Good morning, everyone. Today we're gonna jump right into it. So let's get to the data sets. I'm gonna be talking about today, uh, January the 29th, and also tomorrow, January 30th. Most of you will probably be watching this on the 30th, so if I use today, that's talking about Wednesday, not Thursday, just so that everybody's aware. All right, so the data sets we have today. Um, we don't really have anything too crazy. We do have the core PCE and the GDP. Not really looking forward to too much out of that. We do know that Powell said in his speech today that the GDP has been increasing um, throughout the year. Uh, you know, beginning or the end of 2024 to the beginning of now, 2025. So we can have the same expectation as that the GDP will likely be climbing. Jobless claims, I'm not really looking at anything too specific there. If we do get a increase in the jobless claims, then that would obviously be a signal for the treasury market to probably uh, reduce yields. For TLT, that means the price would go up. For equities, that could honestly go both ways. It depends on the narrative right now. That type of narrative should be bullish for the market, but again, it could go either way, and I'll get into that in a couple minutes. But next, I want to talk about, uh, let's see, we finished the data. Okay, so we're gonna go talking about Powell's speech today. Um, I don't want to go over a whole ton of about it, other than just to kind of briefly discuss what he discussed. Um, Obviously today was a pause, so what that means is that they're going to hold the rates until the next FOMC meeting, where they will then decide, whether they're gonna pause or uh, continue cutting. Um, Now, what the Fed is doing right now is they're really trying to posture in a way where if the labor market starts to falter, where, a couple months ago, I know through the Weeble posts and everything, I talked about how the labor market was really struggling. If they start seeing that again, then they are in a stance where they don't have to pause, they can cut if necessary. But they're also at a stance where the economy is starting to pick up. Inflation is starting to increase a little bit, so they don't need to cut every single meeting. They can more so save those cuts for when it's actually a necessity compared to um, having to force it. So uh, expect rate pauses for a little bit, but we'll go over each time, of course. And then what else? So yeah, the Fed's really just waiting for data right now. Um, they want to see the labor market not fall apart. They want to see inflation not pick up, but not drastically decrease either. They're really looking for the soft landing. I still am hesitant to say that they're going to get it, but they've really been pushing quite hard for that. So, next we're going to go into earnings. Today we had Microsoft. It was a beat, but it had very soft AI guidance, and the guidance was more so that their AI is not being profitable to the company so far, which is why we're seeing Microsoft suffer a little bit. But I do expect that to get bought up. I mean, it was a beat. Meta was a beat. You guys see the overnight action. It's up like 5 or 6% right now. Tesla missed, but the conference call and the guidance was actually pretty hyped up. Uh, I didn't listen to it, but I read the transcript, and they're basically trying to project 2027, 2028 as like one of the biggest years for Tesla. Um, they're expecting to beat majority of other top companies, blah blah blah. Whether it's hype or not, I don't know. We'll follow it as time goes on. LRCX also beat, so I think it's up like 6 or 7% in the overnight. Uh, those were the four I was looking out for today. So moving into tomorrow, we do have Apple's earnings after close, so the market will definitely be looking for that one. We also have Intel's earnings after close. I don't really care too much about Intel, but I know some of the market does, so uh, be on the lookout for that. Major break or anything in the earnings could do a little bit to the market on that one. We also have Visa earnings tomorrow. The symbol is just V. I don't like playing Visa. I don't like playing the credit card companies and stuff like that, but I do know many people are watching that, so be on the lookout for that one. Now, let's go ahead and actually jump into the SPY TA now. So, going over the daily chart, let's look at the Bollingers and the moving averages. Again, I'm gonna pause the video 1 second. Sorry, I'm still sick. I don't want you guys to hear me cough. Anyway, let me pull back up this. Alright, so this is the daily chart. We're still pulling away from the upper Bollinger, but as you can see, the upper Bollinger is actually starting to open up, as the bottom Bollinger is starting to open up as well. As the 20 MA starts to move up, you're going to see the Bollingers open up more. So each day the 20 MA increases, the upper Bollinger will increase and the bottom Bollinger will also decrease. As that the Bollingers track the 20 mile here. I'll describe that in a different video, but that's what the setting is for. So the 20 mile and the mid band are the same thing. But we were getting ready to test the 5 mile today. It did not go through. As you guys saw, we closed at 601.81, and in the overnight we're at, I believe, 603 right now. Let me see. No, 604. I apologize. 604. Um, we were not able to meet the 5 mod today. Now, assuming the 5 mod is going to open probably around 603.44 tomorrow, then we might be already 5 mod testing as of right now. And they might actually kick us out of that move. That's something that's happened quite many of times before. I wouldn't be surprised to see that again. I know that 607 level was really stacked, so I do still see them pushing towards that. But just going from level to level, let's focus on the 5 mod first. So let's take it down to the hourly chart. Actually, I want to go to a smaller chart first. I want to go to the 1 minute. Now, I'm not seeing any crazy bullish or bearish structures forming in the micro chart so far, but I will most likely see that better on my phone, and I'll post that on Webull as I usually do. But going over the hourly chart, I do want to hide the Bollingers for a moment and the moving averages. We still have this big structure forming here, which, if you all know, that is a inverse cup and handle potentially, right? Um, we know this cup formed. This is definitely a bearish structure that holds some weight. What we're needing to determine now is if this is a handle or if this is breaking out to become a new structure. I discussed this a little last night, but a lot of inverse handles, so assuming this is an actual inverse handle, it would pull down and form another cup here, and then form the breakdown into that new level downward. Um, I'm not seeing this. What I'm seeing is this forming into a cup. So that would be a bullish cup all the way back up to that 610.78 level. And one of the reasons why I'm still looking at this as a bullish cup is you see how we have this level right here? It's one of the first major buy candles in the sell-off. Okay, we have that buy candle right up to the top of this cup. So we now have a smaller nested cup, and we now have a handle forming. If we zoom in onto this further, we can actually see an inverse head and shoulders, and I don't know how to do the drawing tool yet. I will get it figured out this weekend so I can actually draw and show you what I'm talking about, but you kind of just have to follow my cursor while I do this. But you can see the left shoulder, the head, the right shoulder. So that is decent liquidity to push us up for the day and to get us to the top of that cup if they really want to. That would be a cup and a handle or a inverse head and shoulders. And that would also be the nested cup and handle to break us out and complete this larger cup. So that's kind of what I'm looking for the bullish thesis is for this cup to finish out, get us our 610, 78 level, which again, the upper Bollinger right now is at 612, 63. It's going to pull up probably close to that 613 area. So if this does complete, we're very, very, very likely going to pull up to that level and probably pull up or push up a little further past that, probably closer to the 614, 615 level. And I know that seems like a far away level right now, but this liquidity is really good to push upward. But on the same note, we do have the 20 mall underneath us. We do have the 10 mall underneath us. We do have the bottom Bollinger underneath us. So if this rejects here, and this absolutely can, you do see this being a inverse cup. It might be a micro one, but it's still an inverse cup. So you can see larger inverse cup, smaller inverse cup. This can absolutely turn into a micro inverse cup and handle and pull this down. And as you can see, this could also be a head and shoulders as well. Left shoulder right here, the head, and the right shoulder. So this can absolutely pull down still. With that said, since we're still going to be testing the 5 mile area very likely at open, this is still a very, very, very quality area for straddles and strangles. Uh, I know many of you had questions about the straddles and everything. I'm going to do a totally different video on that sometime, but I want to let you all know that this is a very good position. There's a lot of room upward, a lot of room downward. The final thing I wanted to go over is the calls that we're holding right now. So many of us are holding the Soxal calls, which is the 3 times bull leveraged Sox based position. Um, I'm actually going to pull up that chart right here. Let's pull up the daily. Now, what I'm looking for here is the 20 mile. Many are going to be trying to exit at that 5 mile. So the 5 mile is at the 28.74. It's going to pull down slightly since, it's trying to consolidate within this area right here that we're at. We have currently the price is at like 26.26, give or take. So there's still a solid like $2 worth of movement for the 5 mall and the market to consolidate together. So it's going to be around that 27-ish area. But we have the 20 mall still at the 29.78 area. So it's very likely we will be able to exit our calls around that 30 mark. And, that was a very good play. That's a full, 6, 7 point play right there. Now for NVIDIA, I know many of us are holding the 118 and 120 calls. Hold on, where's my NVIDIA? I'm so sorry, I'm not prepared. Okay, NVIDIA, we have a ton of support above us. So we have the 5 mile right now at 132.19, while the market price is at 123. And again, today was on the third day of the bottom Bollinger. This would have already been a very, very good opportunity to take long calls into. But with this Bollinger move being extended, excuse me, with this Bollinger move being extended, it's still a very good opportunity. You still have plenty of room to retrace up to the 5 mile, so have plenty of room to retrace up to the 20 mile, and they're really not that far away. The 5 mile is still full $7 of movement. I mean, that would be an incredible call to take still, and the 20 mile would give you a full, almost $10 worth of movement, if not more. So, definitely some good areas on that. Now, I just wanted to finish this video out by discussing the Discord. I'm going to be linking it in the channel description, but we have a great community over there, almost 800 members or 900 members. I can't even remember right this second. And we also have the Weeble community, which has over 7,000 followers. I know many of you followed me from Weeble. Thank you guys. I appreciate you. I appreciate the support and everything else. If you like my videos, if you support what I do, then please subscribe. I'll be trying to post as much videos as possible as I ease into doing this more often. But other than that, I hope everyone has a great trading day tomorrow. Like I said, there's plenty of room up and down. Don't be afraid to take a straddle or a strangle. Just make sure you get some time on it. I know many people think I don't like 0DT stuff or like lower expiration, but I just don't like teaching around those, as those are far more riskier assets or monetary instruments, I should say, compared to like a 2 week or a 4 week dated call at a very good level. Um, I feel like most traders are going to benefit from the longer calls, so I'm going to be trying to focus more on those still. But I do zero DTs as well, and I will do some videos about those. But yeah, anyway, I'll stop rambling. I hope you all have a good night, and let's have a awesome trading session tomorrow, and I will see you then.